Hello, and thank you for tuning in to this e-learning webinar on common risks and challenges for charities working internationally, created as part of International Charity Fraud Awareness Week. The week brings together everyone involved in the charity and not-for-profit sectors to raise awareness and share good practice in tackling fraud and financial crime. We encourage you to share this video and any of our other resources with your colleagues. I am Pascal Nichols from Amnesty International, and during this session I will be covering factors that may elevate the likelihood and impact of fraud risk and what should be done about them, key fraud, bribery and corruption risks, challenges and mitigations, and we will conclude with a case study. To provide some context, the International Secretariat of Amnesty is made up of our regional offices, our international advocacy offices in Geneva and New York, and our global hub in London. Regional offices are located in cities in Africa, Asia Pacific, Central and Eastern Europe, Latin America and the Middle East, which are major hubs for our investigations, campaigns and communications. Transactional processing and financial reporting for each regional office are performed by dedicated finance teams in country. But Amnesty is made up of many member organizations. They undertake a variety of functions at the national level, including campaigning, fundraising, government lobbying, communications, research, and membership access and participation. Amnesty has national offices in over 70 countries, which operate in accordance with core Amnesty International values. Each national office has its own independent board and senior management team. Fraud, bribery and corruption are found in all countries and affect all types of organizations. They hurt the poor disproportionately, undermine economic growth, and are a barrier to poverty alleviation and good governance. For charities operating internationally, there are a range of factors that can elevate both the likelihood and impact of fraud. And to develop a robust fraud resilience strategy, it's important to understand these. It is said that fraud generally occurs when three conditions are present. Management or employees have an incentive or are under pressure. Circumstances exist that provide an opportunity for fraud to be perpetrated. And finally, individuals involved are able to rationalize committing a fraudulent act. And whilst there are a multitude of factors, I believe that these are the most relevant to us. In decentralized structures, there may be limited capacity for oversight, due diligence, and assurance reviews. Complex and unclear matrix management may also be a contributing factor. Where organizational governance lacks clarity, direction, or substance, or governance structures are unduly complex and boards are ineffective. If there are fragile internal operating contexts, which could include organizations facing financial difficulties or those recovering from the consequences of bad decisions, the risk also rises for organizations operating in regions facing emergencies and in fragile states or conflict zones. Where there is a lack of investment or capacity for internal audit, which may mean that there's a lack of internal ongoing monitoring of controls and failure to take any corrective actions. Where there is an organization that lacks policies and communication relating to individual accountability and best practices. And finally, there may be instances where activities prohibited under law in one jurisdiction may be expressly permitted or required by a written local law in another jurisdiction. I would like to share with you the key risks that we feel are most relevant to our work in the international context. Firstly, there exists a real risk of fraud, bribery or corruption in the procurement life cycle, given our decentralized procurement function and limited capacity in London to support all of the regional hubs. The key risks here are extending a contract with a supplier without performing any financial due diligence, appointing consultants without a signed contract in high-risk countries or regions, working with freelancers without any agreed terms such as fixers or visa agents, or engaging suppliers with a track record of fraud, bribery and corruption. Next, facilitation payments, for example, paying a customs official a sum of money to allow entry to a country without a visa, may be common in some countries but are of course illegal under English law. Given the extensive travelling undertaken by our staff and the regions worked in, it is recognised that in practice it may be impossible for staff in all cases to refuse payment, for example, where there is a threat to health or personal safety or that of another person. Thirdly, theft. We ourselves have been a victim of internal theft, that's credit card fraud, but this risk area also covers approval of inflated expenses or fraudulent invoices from suppliers, as well as theft of property. And finally, collusion with a supplier or consultant to appoint them and therefore avoid a competitive selection process may in some cases also constitute fraud and corruption. We will now consider the challenges that are of particular relevance to charities operating internationally that may adversely impact on building and maintaining a robust fraud resilience framework and how these may be mitigated. Operating in organisations with complex governance structures presents inherent risks. As I've said before, there may be limited capacity for oversight of the effectiveness of local boards, and when an individual is in a position to dominate the decisions of the management team, especially when the board of directors is weak, this individual is more likely to engage in unsuitable behaviour or facilitate the unsuitable behaviour of others. We have sought to mitigate these risks by undertaking risk-based assurance reviews and due diligence procedures prior to awarding grants. Ensuring that the highest decision-making body in the organisation is setting the appropriate tone from the top and also using appropriate language is key. You will only be able to create a real anti-fraud culture if this is present. We must be aware of zombie policies, and I'm sure we all have a few. A policy will only have value and impact if it is communicated and explained, embedded and reinforced. So simply creating anti-fraud and whistleblowing policies will not guarantee their use. Policies need to be reviewed for ongoing pertinence and publicised widely. And in relation to reporting guidance and whistleblowing support, we will be using the Fraud Awareness Week to re-engage our staff with our whistleblowing policy so that they are able to trust the reporting system and also feel secure in how their information will be handled. This is crucial to improving the level and quality of incident reporting. Over the last 3 years, we have continued to develop our fraud, bribery and corruption resilience strategy to respond to the changing operating context at the International Secretariat. I would just like to spend some time talking about these mitigations. We have established a staff engagement training and communication program. Our e-learning module was released in 2018, and we continue to promote and monitor completion rates across all of our offices. Our Fraud Awareness Week planning is underway, and this year we'll be asking our National Office Finance Directors to share their best practice guidance for the development of fraud resilience frameworks and anti-fraud policies locally. We have continued to use our Insider Fraud incident to promote a real anti-fraud culture and to create a deterrent effect. We regularly review our key financial fraud risks and evaluate related internal controls for effectiveness. And in relation to procurement fraud risk for staff, we continue the thorough background checks undertaken by Sterling Talent that were introduced back in 2017. And the procurement team will be assessing the risks of our decentralised procurement function, specifically in relation to vetting suppliers contracted by our regional offices. And then finally, the combined anti-bribery, corruption and fraud policy that applies to all of our offices is regularly updated. And again, we'll be using the Fraud Awareness Week to clarify and reinforce the key principles underpinning this policy. And finally, to our case study. Imagine a developing country in the Global South which receives significant grants from the London office to support their local human rights work. The country director was always charming and effusive, and we always heard what we wanted to hear. Although they stopped sending their quarterly returns, he always had a good reason for this. There were a number of red flags that gave colleagues cause for concern in this office, including issues with data verification, local staff complaints, and the behaviour of management. Collectively, these did increase the risk rating for the local office, and an internal assurance review was initiated. But within 2 hours of being in the office, our worst suspicions were confirmed. I've spoken to those involved in the assurance review, and they believe that there were many factors that did increase the likelihood that fraud would be perpetrated and would go undetected for a period of time. And these included the country being in a location that is struggling with bribery and corruption, and this may have contributed to those involved in the fraud being able to rationalize their actions. There was no functional board and a lack of accountability to key stakeholders. Policies existed but were vague and not operating effectively. In particular, there was no robust whistleblowing policy, so staff had little confidence in reporting and investigation protocols. Key financial controls were lacking, there was limited segregation of duties, and as I've said, delays in financial reporting. Due to the freezing of grants from London, there had been limited due diligence performed in recent years. And finally, there was nepotism in both procurement and recruitment. However, it's also important to note that we did rely on the local board and local external auditors to provide reasonable assurance over the controls, and it was only as a result of this review that we found these were indeed not operating as expected. So in conclusion, what have been the key learnings from this? So firstly, always take notice of staff warnings and investigate appropriately. Secondly, to invest in internal audit and ensure that external auditors are truly independent. And then finally, and most importantly, support all officers and regions in building and maintaining robust financial control environments. Thank you for listening. Please remember to check out the other free resources created as part of this week, which are available on our online hub. Together, we can keep charity fraud out.